Hello, everyone, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be looking at the two events coming up this afternoon. One will be the US manufacturing PMI, and two will be the JOLTS job openings. Once we cover that, we'll try to project the market reaction to that. So hopefully everyone will benefit from this session. So as always, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So with that said, I would like to begin right away with the economic calendar. So as of this morning, we had quite a number of economic announcements, and the leading one was the inflation report from the Eurozone. So as you can see, since morning, there has been quite a number of announcements, with China having a bank holiday today. So at least a calm on the Chinese markets that were leading the rally on Monday. So core CPI flash estimate came in at 2.7% as expected, whereas the CPI flash estimate for the Eurozone came in at 1.8%. And this is now significantly below the 2% target, which might allow the ECB to continue going for much higher than expected rate cuts. So clearly, this is a big win against inflation, an inflation that was up above 10%, and now it's back below 2% at 1.8%. So now this big challenge has already been eliminated, which means that the European Central Bank has more freeway to continue cutting rates in order to stimulate economic growth. So this afternoon, we'll be looking at quite a number of things. One, the manufacturing PMI from Canada. This will be at 4:30. It will show us an indication of the manufacturing trends in Canada. So as per the previous reading, it was at 49.5, which was still slightly below the 50.0 midpoint, which indicates expansion. So now manufacturing remaining below 50.0 in Canada would be the first time it goes positive since May last year. So this might be a very welcome update if we see anything above 50.0. However, if it remains on the negative side, this is not so good, and also not so good for the currency. Then we get final manufacturing PMI for the US at 4:45 p.m. So this will be interesting to watch. US is a leading manufacturer across the world. So in this case, having seen the last two reports coming in below 50, now we expect at least to see some improvement, or perhaps it remains at the same level. So the market projection is that it remains at 47.0, but an improvement will be positive for the dollar. So that's not the only manufacturing PMI report we'll be getting. There's also the Institute of Supply Management manufacturing PMI report. This one was at 47.2 last time. We're expecting a slight improvement to 47.6. Also, we know that it has been in the negative for quite a while. So a shift towards the positive might be very welcome for the markets. But for now, it shows a much more weakening manufacturing sector, with only 1 month having a positive data since December 2022. So it was only in April this year that we had an uptick, but since then, we have been seeing numbers below 50. So besides that, there's also the JOLTS job openings. This is very important. So this is an indicator that is released by the US Bureau of Labor Statistics, and it basically measures the number of job openings during the reported month, excluding the farming industry. So in total, the US had about 7.67 million job advertisements, and we're expecting that these slow down to 7.64. So it's a key labor market indicator, and as you can see, it has been slowing down for quite a while now. So in this case, it's very clear that we have been seeing the JOLTS job openings moving lower and lower, with a peak last seen in May 2022. And every bit we have seen this data point moving down, and now we are below 8 million at 7.67 million job openings. So it's a weekly data point, and as we had seen in the previous readings, there are downward revisions. So the black dots that you see on the chart here represent downward revisions, and that has been a key trend over the course of this year. So in this case, if we see a much lower number of job openings, it means that the job market in the US is in trouble. So we might want to look at things differently. So looking at the job openings, if they are lower than expected, then that should be a red signal. And as Powell said yesterday, in case the job market continues worsening, then the Fed is ready to go for an extra 50 basis points towards the end of the year. And that should be likely a bearish signal for the dollar, but also bullish for the stock market if the Fed continues cutting rates at a faster rate. So in this case, we'll be expecting to see a summary analysis of the reports once it happens at 5 p.m. So on one side, if we see a weakening manufacturing sector and job openings going down, then that should be very negative for the dollar, and a strengthening manufacturing sector, whereas we see more or an increase in job openings, then that should be positive for the dollar going into this afternoon. So as you are aware, I will be getting quite a large number of FOMC speakers. So yes, yesterday we had quite a number, including the Fed Chair Jerome Powell. We had FOMC member Bauman, and of course MPC member Green, and ECB President Lagarde. So today in the evening, as the market approaches closing, we'll be getting a speech from FOMC member Bostic, Cook, and Schlegel towards midnight. Then after midnight, we'll be getting a speech from FOMC member Barkin, Bostic, as well as Collins. So all these FOMC members will definitely be sharing a message or a signal. So if they signal that they are going to accelerate the rate cuts, then that should be considerably negative for the dollar index. But then on the other hand, if they show reservations on cutting interest rates, then in that case, we could be seeing the US dollar recovering. So as of this moment, I want to jump straight into some technical analysis, try to understand where we might be headed next. So let's get straight into it. So this is the MetaTrader 5 trading application. It's the one that we use to trade on a desktop or laptop. If you're looking to trade on a smartphone, you can use FXPesa's Equity Trader app, which is available on Play Store as well as Google as well as Apple App Store. So clearly, if you start with the dollar index today, you'd notice how the dollar has strengthened and regained some ground against other currencies. So this is a blessing in the making. Remember, we are always looking for these kind of pullbacks. So after the acceleration yesterday, then today in the dollar index, what we are looking at is a major resistance area here. So perhaps we should be looking to see some form of reversal once we get to see the dollar index around this area here of 101 having bounced from a low of 99.831. So having seen or experienced this strong dollar for the day, we have had some major pullbacks. For instance, for the Euro USD, it was able to break this particular trend line and then extended the drop all the way down to 1.10689. And this is a level that we identified as a previous support. So after getting there, now we are observing to see whether there will be an extension of this move or whether the price will be bouncing from here. So more likely than not, having seen the negative inflation report in the Eurozone, where inflation dropped to 1.8%, indicating that the ECB or the European Commercial Central Bank will be cutting rates, has accelerated the sell-off in Euro USD. So now we observe this area here to see if there's a break or the market bounces from here. So if the dollar starts to be weak, especially as we enter the New York session, then a potential bounce from here could be playing out. But then also the alternative idea is also viable. If the market breaks this area, then the next target is 1.10074. So we observe this area here to see the reaction during the New York Open. So for pound USD, we have seen a major break to the lower side and a sell-off. The market has found some support on the low that we saw last week. So now that we are approaching the New York session, also the alternative will be true. So the same analysis for the euro, a price for the pound. So if the dollar happens to start weakening, then we could be seeing the market going all the way back up. But then if the dollar retains strength during the New York session, then this could extend to the previous low around 1.32631. So as for pound yen, you can see the big sell-off that happened last week. So this week, the market attempts to make a comeback, then pulls back downwards, which implies that the market is potentially trying to form this channel since yesterday. So for the week, this has been the sequence of highs. And if we look at the sequence of lows, then it seems likely that the market is trading in a channel. Now we just bounced from the lower side, heading back towards the upper side. So for AUD-USD, it seems like a market in distress after making a very strong rally to record levels. So these are levels that we last saw here. So this was last seen on the 21st of February last year. So now seeing the market rejecting that high, if you go to the 4-hour chart, you can see the consistent push to pull back. And now from the 1-hour chart, you can see clearly the market is attempting to push further back downwards. So the prevailing area was here. So this was the area where we had resistance twice. So now the area turned into a support. Notice how the market couldn't go below. And now it's retesting again with a potential break. So if we happen to see that break playing out, then we could be seeing a drop to around this area, 0.68631. And if that fails, then the market remains within a range. So potentially bouncing from here and moving back here. So everything is not yet so clear for the week. We don't have those major trends that we usually experience. So for instance, if you look at USD, it's pretty clear that the market is just consolidating. So notice how we have this sequence of lows that are getting lower and a sequence of highs that are getting higher in what looks like a loudspeaker kind of formation, with the current swing being from the lower trend line moving up towards the higher trend line. So if we think of this as the current swing, then the expectation is that the dollar continues strengthening against the yen. So the midpoint of the consolidation is somewhere around here. So I think right now we are looking at a critical junction in USD in whether the market extends the rally all the way up or goes back to the previous bottom here. So the Nikkei 225 index is still attempting to make a recovery after the big crash that happened in the month of July. So we can see the attempt to come back up, and then the drop here, another attempt to move up higher, which was broken. We saw the resistance being broken here. Market pulled back, and it's now attempting to push higher even further. So for now, it seems more likely that the market will be looking to make more recovery. So from the most recent resistance area here to breaking and forming a new one, now it seems more likely that the market will be pushing to retest the area again. So in this case, likely outcome, especially as we go into the Asian session tomorrow, would be the market potentially retesting this area of 39,059. So as for gold, we have a clean break. So if you go to the 15-minute chart, you look at the resistance over the last 3 days. This was an area that gold was unable to break for 3 consecutive days. Then on the 4th day, the market breaks and retests. So notice how we had a break here. The market retested, extended higher, and then pulled back as if it was a second retest. And now the expectation is that gold continues to drive higher and potentially goes for another all-time high. So in this case, with a break here after the consolidation, we know that the market is now preparing for another run to the upside. So in this case, it could potentially play out from here. and then extend to 2670 with a potential extension to 2684. So Brent oil still consolidating after making the big move in the morning. So there was a big move here, and then a pullback, and then a drop, which more likely indicates a market that is moving sideways. So for the day, I may not be expecting much from Brent oil after the big sell-off. This is what we are seeing. Market that decided to consolidate. So rather than extend the trend or make a full on recovery, the market has just decided to be trading within its borders. So we are not breaking the high of the day or the low of the day. It seems more of a sideways consolidation. So for US equity indices, we had a breakout yesterday here. So if you notice how the market was consolidating for 3 days, there was a clean break 2 hours to midnight. And then today has been a story of a sideways momentum. So we haven't seen much of market activity. So perhaps we'll be seeing more market activity during the news announcement at 5 p.m. So for this one, I would urge everyone to be patient and wait for the eventual break at the market open. So probably more activity at 4:30 and even more activity at 5 p.m. So for now, today has been a sideways momentum, though we already broke out of the pattern. So I'm in favor of a breakout towards the upper side, which will likely lead to a good rally. So for the US 30, there was extreme volatility, especially towards midnight yesterday. So now looking at the overall chart, you can see what has been happening here. So it's a market that has been going up, consolidating for a while, attempting to pull back and eventually pushing into new all-time highs. So just 2 days ago, we had a new all-time high. So we can see that there is extreme volatility every time the market hits a new all-time high. So for instance, in this case, after hitting a new all-time high here, there was a big sell-off which extended into the following day. And then the market is now picking up the pieces as we attempt to push for yet another all-time high. So I'll be looking for signs of bullish momentum here to see if we can go for yet another one. But we don't have the signs yet. So I would advise you be patient and wait for the open of the New York session. So the New York open might be the eye opener here. So for today, we haven't had much of an activity. So if you look at the range, the market has just been following this path. So since open, nothing has been happening. And of course, volatility is expected at the New York open. So US 500 or the S&P 500 are still struggling to make a good rally. So yes, yesterday in the evening towards midnight, there was a big jump, especially after Powell. But now notice how the market is moving sideways. So perhaps we'll be needing more fuel to drive the bullish momentum. For now, it seems like these 3 indices are just moving sideways, waiting for the next fueling event. So Russell 2000 still swinging up and down here. So we don't have much of an activity. But then it's a change from the previous pattern where the market was constantly moving down. Now there's hope of bullish momentum following this sequence of lows that are getting higher. If you compare the highs, they have been getting higher, save for yesterday. So right now we are in the middle of the pattern. So I would advise that you observe for potential entry locations along the lower trend lines where the market will more likely bounce and continue in this pattern. So BTC has successfully broken the lower trend line and is now attempting to push further downwards. So for short-term intraday activity, the expectation is that the market drops to around 62,542. So dollar trading against the Swiss franc, this is something we analyzed on Monday. It's still moving slow, but within target. So the target is still 0.84932. So I expect to see some further upside in the dollar against the Swiss franc. So for New Zealand USD, we are approaching a critical decision point, which is the lower trend line. So we observe the price action around this area here to see if there is a bounce or whether the market will be breaking, with the more likely outcome being the New Zealand dollar gaining some strength and establishing basis for the next run to the upside. So we should be expecting to see some good bounce from this trend line. And if it plays out, it's a nice position targeting the previous high. So it has happened before on the trend line. So we just be patient and see what happens here, especially during the New York Open. So for USD CAD, we had been projecting that the market would continue with this rally until it gets to this area here, which was 1.35372. So the market eventually got to our target, and you can see the reaction is a straight up sell-off. So now you can see the market even retesting the lower trend line here. And if we happen to break, then the idea is to trade it all the way back. So if the breakout is clean, then our potential target would be 1.342, but also some in between target around here, 1.34625. So very easy to identify potential opportunity. So we should be expecting to see some good activity from this one. So if I was to choose a chart of the day, it would be USD CAD, looking for a short selling position. And of course, we have the New Zealand USD pair, which is about to yield some good fruit, but it requires some patience as we wait to see what happens in the charts around this area. So I'm checking on the comment section. So hello, Samuel Mwangi. Hello, Jason Esther Kabiro. Thank you for joining. Hello, Libet. Dennis Mwangi. Thank you for joining. Clavijak. Thank you for joining. There was a request to check on the NASDAQ and the USD CAD. I think I already covered those, and the session is live. So you can rewatch it as many times as you want right after this. So thank you very much, guys. Thank you for your time. So there is one last question before I end. Can you explain how to utilize the CME Fed Watch to check rate hikes and cuts? Okay, let's go to the website. Just give me a sec. So what you're looking at is a website called the CME Group or the Chicago Mercantile Exchange Group. So they have this really good indicator. It's called the FedWatch tool. So it basically shows you the latest probabilities of FOMC rate moves. So the next meeting by the Federal Reserve Bank of the US will be in 37 days from now. So what is the likelihood that the Fed will change the federal target rate at upcoming FOMC meetings according to interest rate traders? So use the CME FedWatch tool to track the probabilities of changes to the Fed rate as implied by the 30-day Fed funds futures prices. So in this case, we are looking at traders who basically focus on interest rates, and their position can tell you a lot about what the market thinks about the next interest rate decision. So as of today, we are looking at a rate decision that will be happening on the 7th of November. Remember, that's 2 days after the elections. So currently, there is an expectation that the Fed will be cutting rates by 25 basis points to 4.5, 4.75% range. So there's also a 39.2% probability that the Fed will be cutting by 50 basis points to 4.25 and 4.50% range. So the changes in these probabilities are majorly impacted by economic releases. So whenever we have new data that is reflecting on the Fed, then these changes in probabilities as the investors react to that information. So for instance, these percentages could have a big shift, especially if we happen to see a big surprise in the non-farm payrolls on Friday. So we keep track of these movements, tell whether the Fed is leaning towards a rate cut, and if so, by how much. So in this case, the market is betting over 100% that the Fed will be cutting rates. So the market is only divided on whether it will be a 25 basis point cut or a 50 basis point cut. So the way you tell whether it will be a 25 basis point cut or a 50 basis point cut is by comparing the current interest rate, which is between 4.75% and 5%, and then you subtract from the current one here, and clearly you can see it's a 25 basis point difference. So in this case, the probabilities are leaning more towards 25 basis points cut, which is still negative for the US dollar index. So despite the strong rally that we have seen over the last 2 days, there's still that expectation that the dollar index will still dip back towards 100 and potentially below 100 at 99 point something. So that's it for the day. Thank you, everyone. Hello, Esther Karanja. Thank you for joining. Hello, Draco, and thank you for joining the session. So remember, if you have just started trading, we have a free course for you available on FX Pesa YouTube. It's called the Novice to Pro series. So if you are just starting your trading journey, make sure to check the links in the description below. If you're watching this on X, check the links on the FX Pesa handle. And as usual, to our podcast listeners, we have new episodes coming out for the Bullish Manta podcast as well as the Financially Incorrect podcast. So make sure to check them out and enjoy the rest of your trading day. So thank you, Rogers Amoke. Thank you for your response. So remember, we have daily sessions happening from Monday to Friday. They start at exactly 11 a.m. So on Tuesday, this is the only time we have a special session happening at 4 p.m. So in Tuesday, we try to cover what we're expecting in the New York session, and hopefully you're able to identify potential opportunities for yourself. So thank you very much, guys. See you on the next one.